in a timely fashion. So I would like to welcome all of you. We're going to begin with a short video put together by the not necessarily professional, but ever diligent people of our Mission Endowment Fund. After the video, we're going to have a presentation on charitable giving by Tom Gelman, and we will introduce him later. So please give me a tiny bit of patience while I get to the video. When we're showing the video, and later when Tom is presenting, it is helpful if all of you are muted. Otherwise, we get a lot of noise. So, if I can't remember how it is on a tablet, but if you have a PC, there are down at the bottom of the screen there are three dots. Pardon me, that's later. There's also a little microphone, and you will hit that microphone, and a red line will come across it. That will mean that you are muted. Okay. And don't take it personally, but if you do not figure that, I have the power to mute you personally. But I just wanted you to know. Okay. Secondly, there are three dots down below. It doesn't matter quite yet, but a little later it will matter that what you have control over what you see on your screen. If you click on those three dots, you will see change layout. Alrighty? And if you are given some options of what you want to see, the most effective thing for you on this will be sidebar. What sidebar will do is that when someone's talking, so that later when Tom is talking, he will appear on a big screen, and it'll be easier for you to follow him in that way. So you might as well choose that sidebar now. All right, so I want you muted, please. You may choose sidebar now or later, and I'm going to please now give me a moment to find the video.
Hi, I'm Pastor Roger at Gloria Dei. It is with joy that I give thanks for those who had the vision, the foresight, the faithfulness, and the faith to establish the Mission Endowment Fund at Gloria Dei. It is with joy that I give thanks for those who have supported the fund, made investments in the fund, or have plans to do so, perhaps via something in a will or an insurance beneficiary claim designation that will allow the fund to grow. It is with joy that I right now get to be on the Mission Endowment Committee, which means that I get to hear requests, along with the others who are on the committee, to hear requests from people who've got a good idea, a faithful idea. In many cases, you can just tell this is something God has given them, a passion burning within them, and they just need one thing. They need some funding to move it forward. Right now, I get to be on that group of people who says, we can do that. As the fund grows, we'll be able to say we can do that even more. And I invite you to consider the joy of being part of the way in which the fund grows.
Hi, I'm Ann Rockdashel, and I am a Gloria Dei member for going on 25 years now. And I am also the current chairperson for the Mission Endowment Committee. When I was first asked to be on the committee, I wasn't really sure what it was. I had heard about it, but I wasn't really exactly sure what they did. So since being on the committee for about a year and a half now, I am truly blessed to be a part of it. We have funded so many different projects throughout the world and locally, and that is a great feeling. Several years ago, I had updated my will, and I had actually listed Gloria Dei as a beneficiary, which more or less means that I have designated a certain percentage of my estate to my church family. And this really means a lot to me because it's an easy way for me to be able to give back to my church family. And it's a gift that keeps on giving. And it doesn't really get any easier than that.
Hello, friends. I'm Jennifer Oman Rodriguez. I am a member here at Gloria Dei Lutheran Church, and for the past 5 years, I have been a seminarian at Luther Seminary in St. Paul, Minnesota. I am pleased to say I am at the end of my seminary journey. I am in my last class, and I am in my almost last month of internship. I also have been okayed for first call in word and sacrament by our synod here in Southeast Iowa. So my journey, at least this part of my call to seminary and into ministry in word and sacrament, is coming to an end. And because it's coming to an end, I want to take a moment to thank this congregation, my home congregation, for your support these past 5 years. You have supported me with prayer and with blessing and with cards and with warm thoughts and with friendship and also with money. My journey through seminary with 2 children to support and early widowhood and unexpected widowhood would not be possible without the support of many organizations and people, but also this one at Gloria Dei. Here at Gloria Dei, your financial contributions have become a significant part of the money I've needed in order to pay for seminary. And what I think is wonderful and wild, and the way that God is wonderful and wild, is that all these entities, whether they're individuals or churches or scholarships at Luther Seminary, have come together in a mini body of Christ, creating a net underneath me so that I can answer this call into ordained ministry. So once again, I want to thank you. I want to thank you from the bottom of my heart and on behalf of myself and my son Ricardo and my son Paul, that you have been with me on this journey.
There are many ways to help the endowment fund: wills, life insurance, real estate, stocks and bonds. And the key to each of these gifts is that they will do good forever.
Hi, my name is Amelia, and I am the administrative lead on the LCM Student Executive Board for the upcoming year. On behalf of Lutheran Campus Ministry, I would like to thank Gloria Dei for granting us money from the Mission Endowment Fund. This money has given us the opportunity to plan fun events and perform service projects, even through the craziness that was our COVID school year. We used the money to help fund our Christmas project this year, in which we put together COVID kits for Shelter House and DVIP. Some of the money went towards supplies for the Zoom cooking and baking classes that Pastor Sarah led for us. Those were a lot of fun. This spring, we used some of the Mission Endowment money to pay for a retreat at Harvest Preserve, which included a hike and lunch. Finally, we used the money to put together gift baskets to honor our seniors. Again, thank you so much for granting us Mission Endowment money to help us fund projects and events.
My name is Jean Dunham, and I currently serve as president of the Gloria Dei Congregational Council. I want to speak to the importance of Gloria Dei's Mission Endowment. Our vision for ourselves as a congregation is that we gather by grace and scatter for service. Our Mission Endowment is key to our aim to serve those less fortunate than ourselves, both locally and globally. Whether it has been to support the development of wells in Africa to provide clean water to villagers, or to provide weekend bags of food for food insecure children locally, every Mission Endowment grant makes a difference. The endowment can only continue to extend its reach further if we help it grow. Consider a gift through a direct donation or through your estate planning to extend our reach and allow Gloria Dei's intention to scatter for service to be realized. See the Mission Endowment tab on our website for more information.
If you're a Gloria Dei member, And we have non-members who've contributed to the fund. But if you're a Gloria Dei member, we do ask that you do remember your regular giving to the church. We have an annual budget with ministry goals, and we believe good is done as that is supported. And frankly, the only way those things are supported is by the giving of our members. We ask that as you consider giving to the fund, you do remember their regular giving as well, just as those who set up the fund in the first place were the ones who supported the general giving of the church. Those who receive the gifts from the fund in the future, they will also be supporting the ongoing work of the church. The Mission Endowment Fund doesn't support budgeted things. It supports the possibility for new opportunities and new mission and ministry. You can do that through a number of ways. It is possible. We have some who give a regular gift just the way they support their regular giving through their giving to the church to support the budget. But there are also any number of other platforms and any other number of ways. Perhaps there might be an occasion in which you want to honor someone with a gift to the Mission Endowment Fund. My mother and my mother-in-law were both marvelous givers. They also both, when they died, you know what, they had very modest estates. They were blessed to live long years. When they died, they left what they had to their heirs. Not a lot, but we, knowing that they were givers, were honored to honor them by tithing the gift they gave to us. That's an example of an occasion that might be used. The other is just to consider your own plans for your estate when the time comes. Everybody's situation is different. Some can give from an insurance policy, from an asset, from securities, a charitable trust of some kind. I mean, there's all manner of ways, and it's not the same for everyone. We do ask everyone to consider what you could do, not what you can't do, right? We're not that church. We are all asked to give according to what we can do. And when we do give according to what we can do, then those gifts are oh so generous, no matter what the dollar amount is. We are asked to give according to how we have received. Remember, and this is joyful, this is an enduring gift. But what that means is that the principle remains. It is what the fund, the interest that accrues that is used in the future. And so your gift will keep on giving. And as it does, those who come after us will be able to know the joy of hearing faithful ideas for mission and ministry in Christ's world and in Christ's church. And because of you, because of us, they will know the joy of being able to say, we can do that. Thanks for considering being a part of that.
You know, the Mission Endowment Fund, for me, is an important pathway for helping give a little boost to people and situations that could use additional support. Like other members of the Mission Endowment Committee, I feel fortunate to be able to channel donated funds to multiple applicants who might otherwise come up short. To me, this seems like one great way, among many for sure, to share God's grace in the world. Here's the thing. If you give to the Mission Endowment Fund, it will make a difference.
Thank you very much. You may remain muted. I want to apologize for those of you who find my presence on screen as annoying as I do, but you know, we all did our best.
Welcome to Compline, the service of nighttime.
Oops, we don't want that. Okay, I am now going to turn things over to Tom Gelman. So Tom, if you're not muted, that's good. We needed someone to explain things. I use terms like interest and trusts in very generic ways. Tom, I apologize if I offended you with my inaccuracies. I was working with concepts, not legal documents. We wanted someone who could share some things and actually answer questions. We wanted someone qualified. We outdid ourselves when Tom Gelman agreed to work with us. Tom has helped us actually at Gloria Dei a few times, since I've been pastor here, with some legal matters, including when we sold the LCM house. I don't believe, Tom, that you ever sent us a bill, and we are very grateful for your charitable heart. Tom was born and raised in Iowa City. He received a BA degree from a place called Harvard University, then returned home to attend the College of Law at the University of Iowa. After completing law school in 1978, he joined the law firm now known as Phelan Tucker Law, LLP, where he has been a partner since 1983. Tom has a general legal practice principally in the areas of business and transactional law, including contracts, business organizations, real estate and gift planning, healthcare, and nonprofit and charitable foundation law. Did I mention he's qualified to have this conversation with us? Tom, in addition to his legal practice, Tom is very active as a charitable person of community service in the city, including Iowa City Public Library Board of Trustees, Iowa City Public Library Friends Foundation, Iowa City Community Leadership Program, Iowa City Area Chamber of Commerce, University of Iowa Alumni Association, as Iowa City Area Development Group, Burr Oak Land Trust, and others. Tom, thank you for your willingness to share some of your time and expertise with us. I believe we've agreed you're going to talk, and when you want me to pull up a video, the PowerPoint, you let me know, and I will do my best to upload that. At that point, you will continue to talk. We will see the PowerPoint and hear you. So, ladies and gentlemen, we welcome Tom Gelman.
Well, good morning. Can everybody hear me? You hear me okay? Good. Okay, great. Good morning. It's a pleasure to be here. I'm happy to visit. My plan is to talk for a little while and then to allow time for questions. I think before I get started with the sort of prepared remarks, I just want to put some context into making gifts. I think there's really three basic steps. The first step is the gift planning, the determination of the gift that you'd like to make, the amount of the gift, and the mechanism for the gift. The second step is really implementation. Now that you've made a decision about what type of gift you'd like to make, gift or gifts, then how does it become implemented so that either during your lifetime or upon your death, that gift can be completed? And then the third area, particularly or principally if you intend to take a charitable deduction for tax purposes, the issue is how do you report the gift properly? And most importantly, how do you substantiate the gift you have made so that it will qualify for a deduction? Depending upon the nature of the gift and the size of the gift and the circumstances of the gift, sometimes you can do that on your own, but oftentimes, particularly for larger gifts, it takes some expert assistance from a tax preparer, either an attorney that does practices in the area of income taxes, or an accountant. So with that as an initial remarks, let's put up that PowerPoint, and I'll work my way through it pretty quickly, and then we can do questions and answers. Okay, so we can skip that page. All right, so just to prove that I'm really an attorney, here's the disclaimers. And essentially what this says, without getting into a lot of detail, is this morning we're really talking generally. We're not really talking about anybody's personal financial or gift circumstances. We're really sort of talking generally. We're sometimes summarizing. And as such, you should be very, very careful not to do something merely based upon our conversation this morning. Before you actually implement your gift and do your to implement your gift planning, you probably will need to seek the guidance of your own counsel, legal counsel or tax counsel in order to properly implement. So this morning we're just kind of having a conversation. When you actually go to implement, please be sure that you get counsel who's aware of your specific facts and circumstances, because they will better be able to advise you. Okay, next slide, please. Okay, so just so that we're talking on the same plane, I wanted to review a couple of things quickly. When we're in the arena of gift giving, there are different types of gifts. And one type of gift is an unrestricted gift. That is when you give a gift to a charitable organization and you have no strings attached whatsoever. The organization can use it for any purpose whatsoever. That really isn't the type of gift that a gift to the Mission Endowment Committee or Mission Endowment is intended to be. That gift is a restricted gift. And among restricted gifts, there are two kinds. There are temporarily restricted and permanently restricted. And in fact, a gift to an endowment of this nature is what is commonly referred to as a permanently restricted gift. In other words, once the gift is completed, its use sort of forever, for perpetually, as long as that endowment fund exists, is restricted for the purposes of that fund. So if you give to the Mission Endowment Committee, that will be what's called a permanently restricted gift. Another concept relates to tax efficiency. And in a charitable giving context, what that really means is that under different circumstances, different assets may be better to give from a tax consequence than other assets. Which assets for gifting purposes may be better depends upon your circumstances, the tax laws in effect at the time that the gift is completed, and what type of gift you are making. For example, the circumstances of an asset being a more tax efficient or less tax efficient changes upon your death. So that while you're living, certain assets are more tax efficient to give, but upon your death, other assets become more tax efficient to give. And so it is, again, very dependent on your circumstances and is part of this planning concept. The other basic concept is that when we're talking about giving, significant giving to like endowment campaigns, we have two basic categories of gifting. Lifetime giving, which are gifts that you complete during your lifetime, and testamentary giving, or plan giving or defer giving, which are gifts that are completed upon your death or after your death, based upon some testamentary instrument, a will, a trust, a beneficiary designation, where you've specified upon your death how assets will pass. So we have lifetime giving, we have testamentary giving. For the purposes of the Mission Endowment, you could choose to do one or the other or both. So in other words, if your gift plan has you giving some during your lifetime and some upon your death, then you will be utilizing both mechanisms, but the tax efficiencies of the assets you might choose to use will be different depending upon whether it's a lifetime gift or a testamentary gift. The one key feature of lifetime giving, which is different than testamentary giving, is that when you give a gift during your lifetime, there is potentially an income tax benefit to you for making that gift. If you give a gift upon your death, there is no income tax benefit because you don't pay income taxes after your death. There could be some estate tax benefits to gifts either during your lifetime or upon your death, but there is no income tax benefit to gifts made upon your death or after your death. Next slide, please. So let's first talk about the category of lifetime gifts, and then we'll talk next about the category of planned gifts or gifts upon your death. So when we talk about the category of lifetime gifts, we again break it down to two basic categories. The first are outright gifts. These are gifts that you make with no retained interest. These can be gifts of cash. These can be gifts of publicly traded securities. These can be gifts of real estate or other property. These can be gifts of qualified charitable distribution from your IRA account. And I want to emphasize that's from an IRA account if you're age 70 and a half or older. It's not from a qualified retirement account, and we can talk more about that. Or another type of a gift is a bargain sale, which are probably unlikely in the context of your mission endowment campaign. So for outright gifts, we're really probably talking about gifts of cash, gifts of publicly traded or other securities, but generally publicly traded securities, stocks essentially, and possibly other property. But other property gifts gets a little bit more complicated and may not be applicable to an endowment type of a campaign. The other category of lifetime giving are retained interest gifts. These are gifts that you make, but as the donor, you retain some interest, either for your lifetime or some specified period of time. Why might you do that? People might make a retained interest gift because perhaps they want the gift to be completed upon their death. They'd like to implement it during their lifetime, but they're unsure about whether or not they might need the income from the principal of the gift during their lifetime. And if they think that they might, then they can retain, for example, income during their lifetime. But then upon their death, the gift will already be in place, and the remainder of the gift, or some portion of the property that was specified, will then be transferred to the charitable organization. And there are a couple of common types of retained interest gifts. One is a charitable remainder trust. This, real quickly, is a type of trust that you create. You make a gift of cash or most frequently appreciated securities to fund the trust. You retain income from the trust, either an annuity payment or a unitrust payment, which is a form of a variable annuity payment, during a period of years or during your lifetime or during the lifetime of yourself and your spouse. And then upon a triggering event, typically the death of the second spouse, the remainder of the funds in that trust get distributed to the charitable organization that you have designated in the trust instrument. In this case, it would be the mission endowment of the church, of Gloria Dei Church. So another form of a trust is a charitable lead trust, which is less common than a charitable remainder trust. And it's really just the opposite. It's a situation where you create a trust, you fund the trust with a gift. The trust provides the income during your lifetime to the charitable organization. And then upon your death, the principal of the trust goes to your designated beneficiaries, likely children or other family members. Charitable lead trusts are a bit of an unusual tool to use, typically for families of significant wealth, where they can afford to give up income, but they want the principal to be retained in the family. There are other types of retained interest gifts. One, for example, is a retained life estate in either a personal residence or a farm property. I should say that generally the gifts that are a partial interest in property are not deductible as charitable contributions. But the IRS has made a few exceptions: charitable remainder trust, charitable lead trust, and retained life estates and personal residences and farm properties are some of the few exceptions to that rule. And a retained life estate and a personal residence would be, for example, where you would deed the property over during your lifetime, your personal residence, to Gloria Dei Lutheran Church, to the mission endowment of the church, But you would retain the right to live in that house for your lifetime or the lifetimes of you and your spouse. During your lifetimes, you would have all of the responsibilities for the care, maintenance, and expenses of the house, just like you would when you own it. But upon your death, then your residence would pass to the church, and then the church would likely put it on the market and sell it, and then convert the house into cash proceeds, and then use those proceeds for the purposes of the endowment. Next slide, please. Okay, so we talked just now about lifetime gifts. We talked about outright gifts, and then we talked about retained interest gifts. Now we're going to talk about gifts upon your death. You can do retained interest gifts upon your death. You would retain an interest for the benefit of your children, for example. But most commonly, if gifts are made upon your death, they would be outright gifts. And so when we talk about outright gifts to be made upon your death, there are a variety of ways in which you can do that. Excuse me. People generally think about their last wills and testament, but that is probably the most common misunderstanding that my clients have about legal matters, is that their assets pass under their last will and testament. They might, but they oftentimes pass by other mechanisms that have been set up during your lifetime. And so the particular mechanism by which you would get an asset outright to a charitable organization upon your death depends significantly upon the nature of that particular asset. So yes, if you have a will or you have a trust, excuse me, sorry, you can make a charitable bequest in your last will and testament or in your trust agreement, where you specifically designate one or more assets or a percentage of your estate or a specific dollar amount to go to a charitable organization. Excuse me, I'm going to clear my throat. It's Sunday morning, and I usually don't do this much talking on Sunday morning, so sorry. So you can do a charitable bequest in your last will and testament, in a trust, a grantor revocable trust that you might have set up as part of your estate planning. You can make it, like I say, a specific dollar amount or a percentage of your assets. But you have to be aware, particularly if you make it a percentage of your assets, that it will be a percentage of the residue of your estate or of your trust, but it only reflects the assets that might be part of your estate or part of your trust. And you have to be cognizant that your gross estate includes other potential assets, such as retirement plans. So most retirement plans will not pass to the beneficiaries by virtue of a will or a trust. Rather, most retirement plans pass to beneficiaries by a beneficiary designation. It also so happens that retirement plans are terrific assets to leave charitably because they are one of the most highly taxed assets. And as a general principle of tax efficiency, the more highly taxed an asset, the better the asset is to give to a charity. Now, why would that be? The reason for that is because charities don't pay taxes. And so while you or your beneficiaries would have to pay taxes in certain instances, if you leave assets to a charitable organization, they will not have to pay the taxes. So on this list of gifts to be made outright upon your death, we talk about specific bequests, we talk about retirement plan beneficiary designations, we talk about IRA beneficiary designations. And in order to implement that, it's not a function of your will or your trust, it's a function of the beneficiary designation language for those particular assets. Life insurance can also be used. And similarly, if you use life insurance and if the beneficiary, then you can designate as a beneficiary the charitable organization that you'd like to receive all or a portion or a percentage of the life insurance policy. And then there are certain assets that you can designate as payable on death or transfer on death by the form of registration. And those are bank accounts and brokerage accounts, accounts where you have stocks and bonds. And you would complete a beneficiary designation, a POD or TOD, payable on death or transfer on death, beneficiary designation for those assets. So let me go back to, or talk a little bit more about IRAs and qualified retirement accounts. So if they are a unique asset, because upon your death, if your family inherits them, they will still have the obligation to pay income taxes on the distributions from those accounts. And so they are a less appealing gift to leave to family members and a more appealing gift to leave charitably, so that other assets that are not subject to tax might be able to go to family members, and assets that are subject to tax would go to a charitable organization, which doesn't have to pay the taxes. So that's oftentimes a very appropriate strategy. But this is one of those assets that changes fairly dramatically during your lifetime and upon your death. So during your lifetime, with one important caveat, you probably shouldn't use qualified retirement accounts for charitable giving, because if you do that, you will be taxed on the withdrawal from the account. On the other hand, there is a special provision that is allowed for IRA accounts for individuals who are over the age of 70 and a half for up to $100,000 per year, where you can direct funds from your IRA account to a charitable organization, and that distribution will count against your required minimum distribution, but will not be included in your taxable income. You can't take a tax deduction for that, but you don't have to pay taxes on that withdrawal if it's a direct charitable rollover to a charitable organization. So in order to leave some time for questions, let's go to the next slide, Roger. And actually, I'm going to skip this. If anybody has questions about charitable foundations or donor advised, you can let me know. Click again, Roger. So in order to make a gift, and particularly a larger gift, being cognizant of the tax considerations and the tax efficiencies that might be possible, or substantiating your charitable deduction for a gift of property or a usual gift of something other than cash, you'll either want to go to an estate planning attorney or an accountant or a CPA to give you some guidance. Oftentimes, people will be attracted to making gifts because of some of the more complicated mechanisms. But oftentimes when making gifts, and particularly smaller gifts, but oftentimes even larger gifts, simpler is sometimes better. And so while it's important to consider some of the more complicated mechanisms to see if they might be applicable to your circumstances, oftentimes just simpler could be better. Yeah, go ahead. That's fine. So the other thing that I wanted to point out is that when you leave a designated gift, you want to be very thoughtful about the designation language in you as a specific bequest in your last will and testament or in your trust. You want to be thoughtful if you make a beneficiary designation on your IRA or on your qualified retirement plan. And when it's going to go to a specific fund, it's always good to reference the fund. So this is just simple language that you could have in a will, in a trust, on a beneficiary designation to get a bequest to the intended recipient, which in this case would be the Gloria Dei Mission Endowment Fund. And you'd merely give it to the church, and you'd identify which church, where it's located, and you'd specify that it is to be added to the Gloria Dei Mission Endowment Fund. And that will get your gift to the appropriate fund. And that's as opposed, keep going, Roger, thank you, because there are other funds at the church. I just put down a few examples. And if you wanted to go to those funds, you would name those funds. But if you wanted to go to the Mission Endowment Fund, you need to be very careful to specify that fund and not generally to the church. Now, you could do multiple gifts to multiple funds, or you could make a general gift to the church. But if you want to make a specific gift to this fund, you would want to specify that fund. Is that my last slide?
I believe it is.
Okay, so I went through a lot of things very quickly. Maybe through a question or two, we can flesh some of that out. Anybody have questions? And if not, I can talk more. We lawyers can always talk more, but please don't be bashful. Ask any question that you'd like. Okay.
Wow, that was just incredibly helpful, Tom. And either they're overwhelmed with information or they just don't have any questions. In our gospel reading for today, Jesus talked and then the disciples didn't ask any questions. And it says because they didn't understand what he was talking about, they didn't even know what questions to ask, apparently.
Yeah. Well, I don't know whether we have any of that or not.
Tom, I found that incredibly helpful. Okay. And if nobody else has a question, we're fine wrapping up too. But
yeah. I can mention that because of the pandemic, there are some special tax laws in effect presently. They were in effect for 2020. They got modified slightly, but remain in effect for 2021. And the unique one is that there's a limit of how much you can deduct in a calendar year based upon a percentage of your adjusted gross income, which is a line item on your tax return. And generally, for gifts of cash to organizations like Gloria Dei Lutheran Church, you could gift up to 50% of your adjusted gross income. For 2020 and 2021, for gifts of cash to organizations like Gloria Dei, you can deduct up to 100% of your AGI. So if you're inclined to make a gift, and a large gift, you might want to consider the benefits of doing that in 2021 if you're prepared to do so, rather than, for example, to make a testamentary gift. Because there are some unique tax advantages this year. The other thing that you might want to consider is when you're making gifts, because of the function of our tax system and the size of the standard deduction, which is quite large now and tends to minimize the benefit to be gained from charitable giving, is to perhaps bunch your giving so that you can reach the standard deduction amount, and then your gifts above that will be deductible. And for a quick example, if you wanted to give 2 smaller gifts in 2 consecutive years, there's a potential that you get less tax advantage than making 1 larger gift in a single year, just because of the way the standard deduction works. And so gift bunching is a strategy that you can use. And of course, you could do that. If you wanted to give a gift every year, what you might consider doing is giving a larger gift every other year or every third year. But there's strategies that you can undertake to get more tax benefit, to make the gift in a more tax efficient way than you might otherwise make that. And again, lawyers who do tax return preparation or involved in estate planning and CPAs and your tax preparer should be able to give you some guidance on how to do that.
Right. Well, what I'm hearing is there are all kinds of vehicles, and there's not one cookie cutter, if you have an interest, talk to someone like yourself, your accountant, and there likely is a way that is the best way for you to do this. So, Tom, I want to thank you so much for joining us. I thank you for your charitable work in the community. It's a joy to see when people like you. I want to thank Kevin Munson, who is a friend of yours apparently, and reached out and to you on our behalf. So, everybody, join me please in thanking Tom.
My pleasure. My pleasure. Everybody have a good day. Thank you.
All righty. You enjoy the rest of your Sunday.
Thank you.
Bye.
Thank you. Bye bye.